Hello and welcome to another update video about the DXY. DXY is pushing further into resistance, and that's okay. We still have space in the resistance area. And as I explained in the last update, we're currently in a situation in which we're just watching if a first 5-wave move to the downside unfolds here in this region. And only that would be a first indication that a top has been struck in this C wave of a wave 2. We're going to dive into that now in this video. Let's first of all take a look at the broader structure, the bigger picture. Bigger picture, completely unchanged to previous updates. So, but for everybody who's new, the idea is that a larger third wave topped in September 22. I can count 5 waves down here into the February 2023 low, where the market locally found a local low around $101. Then we had this, I don't want to say rally, it was more like a sideways corrective pattern, a so-called expanded flat structure, a so-called sideways correction, A, B, C, which topped then here in October last year at around $107. And at the moment it looks as if this decline has started. This decline into the low $90 region. However, at the moment, we are still ranging. Okay, you can see that clearly. If we zoom out a little bit, really since, well, for 1 year now, we've been ranging. We've been ranging in this region just above $101. Is that a surprise? Well, not really. I mean, the $100 level is really a psychological level, a psychological mark. However, as soon as we get below that level, it should really open the trapdoor into that low $90 region. I mean, maybe even a little lower. But I think that could be a rapid decline. Obviously, the forecast would be, as you can see there, that it's a third wave to the downside. And typically a third wave is quite an aggressive move. So it could be quite a rapid decline that's around the corner. And it's something I'm definitely watching, which, yeah, I mean, it sort of would be pretty much in line with the S&P 500, for example, as well. If we assume maybe that there could be a little bit of an inverse relationship there, but again, every chart on its own, you know, correlations come and go. We don't really want to focus on correlations too much. The idea is that there is a clear support level here. You see the red line. I mentioned in the last video, this could also form a bit of an, head and shoulders pattern here, where we have a left shoulder, then a head, and then here a right shoulder, with basically here the neckline around $101. Pretty much the $100 mark is the key psychological level. There's just this one fake out to the downside. And then, basically I'm watching now for this third wave to start. I think it's around the corner. Let's zoom in a little bit. And here you can see the actual resistance levels. So we've had, from this October high, a 5-wave move to the downside, which followed the forecast nicely. Then from this region, we've seen this rally, you could say a rally in a wave 2 correction, currently trying to push above this previous wave 4 high. I have to say that as per Elliott wave guidelines, a wave 2 usually, or tends to, finish in the region of a previous 4th wave of lower degree. So this here would be the ideal area for the wave 2 to finish. I don't have a very clear micro count. I mean, there are different ways. It's a very choppy correction. So, you know, I'm not too worried about the micro count. I could place even the A wave here. The B wave might have been a triangle, or it could turn into a WXY pattern. I'm not so worried about the micro count. At the moment, this looks to me like a corrective move to the upside. And I'm just watching for the first 5-wave pattern to the downside. So essentially the third wave down here should also be a 5-wave move, and the first 1-2 setup would be a nice setup for lower prices. And at the moment there is no such top in place, so I have no confirmation the top is in place. I would need to see a break below the last swing low here, the area around $102.80, to really have a good confirmation that a top is in. I think if we can break below that level in 5 waves, that would be our signal. And then essentially, obviously, best confirmation will be a break below that. It's a small range here. I mean, around $100. That should really open the trapdoor to lower prices. So at the moment, no top in place yet, but could form a head and shoulders pattern. Essentially, as I said, this previous wave 4 high is structural resistance. It's struggling a little bit, but no clear rejection yet. Then also we've got this swing high, which actually peaked at around $104.70. So also here, it could be, just this right shoulder, basically, that could end around that golden ratio level where also the left shoulder finished. And then it could give us here this head and shoulders pattern, something I'm observing. But again, as long as we don't see a first 5-wave move down, there's literally just no top in place. It could still push higher. Next resistance, Fibonacci-wise, 104.75 and then 105.88. Above that level, we might be looking at more bullish structures here. It's always worth knowing where the market will change its mood, and that would be probably above $105.88. We might then start to talk about the reset of the B wave higher, which is possible, but nothing I'm primarily watching for at this stage. So yeah, that's my update about the DXY. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks like Tesla, PayPal, and so on, then feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.